Hello Kanna, I hope that you all are fit and fine, and let me tell you that I am completely fine as well. I welcome you all to this amendment lecture for May 2026 CA Intermediate Direct Tax. So, who should watch this amendment lecture? If you are a student who has prepared for your May 25 or September 25 or Jan 26 examinations, and by any means either you are not able to attend those examinations or you were not successful and you are going to write in May 2026, then this amendment lecture is definitely for you. Even other than those students, if you are a student who has prepared for May 2026 examinations only for the very first time, still, even though you have already studied all these provisions, I will recommend you to watch this lecture. Why, sir? Because number one, this lecture is not going to be a very lengthy one. It is going to be a short one only. You would have already seen it when you clicked on this video. And moreover, amendments are very important from the exam point of view. So if you are watching this lecture, then you will brush up those points once again and will be confident when you are attending the examinations. Fine. So without further ado, let us begin the lecture. So CA Intermediate Direct Tax Amendments for May 2026. Firstly, let me answer your frequently asked questions. Sir, should we attend classes once again if we have already attended classes for May 25, September 25 or Jan 26? Answer is no. You need not attend classes once again. Your old classes was enough. If you are watching this lecture, that is more than sufficient. However, if you feel that you are lacking conceptual clarity or you need some revision batch, then definitely you can attend a fast track batch or power prep batch. Even I am going to take a power prep batch in Chennai, which is going to be face to face as well as online live as well as recorded. I will give the details in the description. If you are interested, you can join. Fine. The next one, should we purchase new material? Answer is both yes and no. If you are asking me that whether for studying provisions do we need a new material, answer is no. This revision lecture is enough. I am going to provide you the notes also. Those notes alone you take a printout and update it in your existing notes. That will be more than sufficient. But for solving the question and answers, definitely I would recommend that you need either a new question bank, or if you are solving from the ICI study material, then you solve it from the new material. You can take a printout of the material from the online. The website material is available, right? You can take a printout of the same and you can work out from the new material, or you can purchase material from institute. Fine. So for attending question answer alone, I would recommend a new material. Then last question, can there be more amendments, sir? Apart from this amendment lecture, can there be more amendments for May 26, September 26 and Jan 27 exams? Answer is yes, there is a possibility, because the CA Institute has not yet uploaded the statutory update for May 26 examinations. So if at all the institute gives a statutory update, and in that update if there are other amendments which are not covered here, then I will upload a separate video where I will discuss those amendments which are there in statutory update. So please be subscribed to this channel so you are updated with that as well. Fine. Now let us come to the amendments. Let us first discuss what are the chapters where there are no amendments, so that you can be very happy. Appa, what I studied before, that only I am going to study now as well, no changes. And don't worry, even in other chapters, this is not like previous year where there were loads of amendments and conceptual ones as well. In this examination for May 2026, there are not many amendments, very easy to cover. You yourself will realize by the end of this video. Fine. So what are the chapter where there are no amendments? Firstly, in basic concepts, tax rates, definitely amendment is there, we are going to discuss. But in basic concepts other than tax rates, there is no change. Then in residential status also, there is no change. In house property also, there is no change. There is only one small point to discuss that we will be discussing in this video. Then from income and other sources, in this head of income also, there is no change. Then clubbing, no change. Set off and carry forward, no change. This clubbing and set off can carry forward, no Kanna. These are safe chapters. Generally, I have hardly seen amendment in these chapters from last 5-6 years. Okay. So now let us jump into the amendments. Let us go chapter by chapter. Firstly, let me tell you about the notes. Amendment notes, definitely what notes I am using in this video, I am going to provide to you as well. You can see the description. I have given you how to download the notes from my Telegram channel. You can visit the Telegram channel and download the notes from there. And you can take a printout of the same for referring. Fine. So firstly, let us come to the most important amendment, that is amendment in tax rates. Because without tax rates, you cannot solve the questions in the examination. Correct? Kanna, for for the previous examinations, you would have studied previous year 24-25 and assessment year 25-26. Correct? But for May 2026 examination onwards, this is not applicable. Now the previous year applicable is previous year 25-26, okay, and assessment year 26-27. So this is very important. The year itself has changed from May 2026 examination onwards. So earlier you were studying the Finance Act 2024. Now it is Finance Act 2025. Firstly, let us talk about the old tax regime. When it comes to the old tax regime, there is no change in the tax rates at all when it comes to individual, HUF, AOP, BOI, AJP, firm, local authority, cooperative society, etc. There is no change. However, in case of individuals, one point alone you have to take care, that if a person is born on or before 1/4/1966, then that individual will be senior citizen. And if a person is born on or before 1/4/1946, then that individual will be super senior citizen. Then when it comes to company, earlier you would have studied that you have to see the turnover for previous year 22-23. Now it has changed. You have to see the turnover for previous year 23-24 in case of domestic company. If the turnover is up to 400 crores, then the tax rate is 25%. If the turnover is more than 400 crores, it is 30%. Fine. So if in old tax regime, these are only the changes. Now let us jump to the new tax regime. So in new tax regime, the slab rates have completely changed, Kanna. So what are the new slab rates now? The new slab rates for individual, HUF, AOP, BOI and artificial juridical person other than cooperative society. What is the slab rate? Up to 4 lakh rupees, there is no tax. So 4 lakhs is the basic exemption limit in the new tax regime. And above 4 lakhs up to 8 lakhs, 5% tax. Above 8 lakhs up to 12 lakhs, 10% tax. Above 12 lakhs up to 16 lakhs, 15%. Above 16 lakhs up to 20 lakhs, 20%. Above 20 lakhs up to 24 lakhs, 25%, and above 24 lakhs, 30% tax. Sir, how to remember this? Very, very simple. See here you take 4 tables. So 4, 8, 12, 16, 20, 24 and it will stop at 24. Similarly, here in tax rate you take 5 table, that is 0, 5, 10, 15, 20, 25 and 30. So 24 lakhs the rate will be 30% and after that the rate will remain as 30%. So this is an easy way to remember the tax rates in the new tax regime. Now let's come to rebate. In the old tax regime 87A rebate, there is no change whatsoever, but in the new tax regime there is change in 87A rebate. Earlier it used to be up to 25,000. Now the rebate limit has increased to 60,000 rupees. Fine. And earlier the total income used to be 7 lakhs. Now it is clarified that the total income limit is 12 lakhs. And moreover, this 12 lakhs is not the total income, Kanna. It is the total income which is chargeable to tax under section 115 BAC. So this 12 lakh limits is only the 12 lakhs which is chargeable to tax under 115 BAC. The special income should not be considered in this 12 lakhs. Fine. The rebate is there, no? I have already discussed the rebate in detail with respect to old tax regime and new tax regime. I have given you a table also of differences and I have in detail discussed the concept. That is available as a separate video on my YouTube channel. I will link the video somewhere here. I will also mention it in the description box and comments, so you can refer that video. It is a must watch video to get conceptual clarity about rebate to attend the questions properly in the examinations. Fine. So up to 12 lakhs, there is 12 lakhs total income, the rebate is available. Above 12 lakhs, rebate is not available. However, if the income goes above 12 lakhs, marginal relief is available. The same concept which was there before, now also same concept of marginal relief. Fine. And rebate of 87A is allowed only against normal tax rates, that is tax rate as per slab. Fine, 115 BAC tax rates, but the rebate is not available against other special tax rates like 11111A, 112A, okay, 112, etc. For that, rebate will not be available. But in the old tax regime, the rebate is only not available against 112A income. Against all other special tax rates also rebate is available. So this discussion I have done in that separate video. Please watch that video. Definitely you will get some clarity. Fine. Now the tax rates is over. Let us jump to the salary chapter. In residential status, there is no amendment. Basic concepts also I told you there is no amendment. Now in salary chapter, first and foremost, let us discuss about the meaning of specified employee. I told you no, specified employee means big employee. So in this specified employee, earlier we used to joke around that only 50,000 is the limit of salary for specified employee. Now this 50,000 has been increased to 4 lakhs. Fine. So who is a specified employee? The director can be a specified employee. A person who is holding substantial interest is a specified employee. And earlier, if the salary was greater than 50,000, such person was specified employee. Now this 50,000 has been increased to 4 lakhs. So only if the salary is greater than 4 lakhs, that person is a specified employee. Fine. Big employee. For specified employee, we had discussed that if a person is a non-specified employee, then 5 perquisites are completely tax-free, which is given on the screen. You can refer it. We have already studied this. No change in that concept. Now let us come to perquisites. In perquisites, there is only one small change in medical facility. In medical facility, when the treatment is done outside India, in such case, for travel, there was a limit. What was the limit? The gross total income should be up to 2 lakhs only. But now it has been increased. The 2 lakhs gross total income limit has been increased to 8 lakh rupees. So here you have to study as 8 lakhs. Fine. Now salary also, only these two small kuti amendments were there. That is over. Now let us discuss one kuti concept in house property chapter. In house property, we know that the meaning of self-occupied property means property which is owned occupied by the assessee or which is unoccupied, and for unoccupied there used to be conditions that the person should not be occupying that property due to employment, business, profession, and he is staying at that other place, etc. Now this condition has been removed. Now it is very simple. Self-occupied property means what? Either the assessee has occupied himself for his residence or he is not occupying. So used for own residence also self-occupied property. Not occupied also is called self-occupied property. Now it is very simple. This condition and all not there. Fine. So house property, only this discussion was there. Now let us come to PGBP chapter, profit and gains from business or profession. First change that we are discussing is in section 37. This is also actually not a change, but it is more like a clarification only. What is the clarification, sir? We already discussed that illegal expenses are not allowed as deduction under section 37. And in illegal expenses also, one point we had studied that if the expense is related to settlement amount paid in relation to contravention of any law, then it is not allowed as deduction. So has this concept changed? Answer is no. This concept has not changed. There is only one small clarification. What is the clarification? Even if the assessee has paid a settlement amount to settle the penalty as per 4 acts, that is what? SEBI Act, that is Security and Exchange Board of India Act 1992, then Security Contract Regulation Act of 1956, then Depository Act of 1996 and Competition Act of 2002. Even if the settlement is paid in respect of these 4 acts, still it will not be allowed as deduction. Fine. So clear? Earlier also not allowed as deduction, now also not allowed as deduction. It is just a clarification that people used to get confused. People used to think that these 4 acts, if we are paying settlement amount, then we can claim it as business expense. The department has just clarified that you cannot claim it as business expense. So that is a small update. Now let's come to section 43B. Section 43B, deduction on actual payment basis. We had discussed that if a amount is payable to a micro or small enterprise beyond the time limit as per the MSMED Act, then it is not allowed as deduction during the previous year. Correct? Now there is a change in the meaning of micro enterprise and small enterprise. So now what is micro enterprise? investment in plant and machinery or equipment should be up to 2.5 crores and the turnover should be up to 10 crores, then it is a micro enterprise. And if investment in plant and machinery or equipment is up to 25 crores and turnover is up to 100 crores, then it is a small enterprise. So now the limits have changed. So these revised limits you have to study to determine whether an organization is a micro or small enterprise or not. Fine. So this was also a small change only, but please update it. Fine. So with this PGBP chapter also over, now we are jumping to capital gains chapter. In capital gains chapter also, not many amendments are there. One or two small points. Let us discuss quickly. Firstly, section 2 clause 14, which defines capital asset. In this, there is a small change. In point number B, earlier we used to study, if any security is held by a foreign institutional investor, then it is always considered as capital asset. It is never considered as stock in trade. Now, along with this foreign institutional investor, one more type of organization is added, and that is investment fund. So if there is an investment fund and such investment fund is holding any security as per SEBI regulations, then also it is not considered as stock. It will always be considered as capital asset. Practically, this is not important for your exam point of view because investment funds are covered in CA final level. But still, theoretically, if at all it comes in a multiple choice question, you should be able to answer that even if an investment fund referred under section 115 UB is holding any shares or securities as per SEBI regulations, then it is always called a capital asset. Fine. Now let's come to section 50 AA, market linked debentures. In market linked debenture also, there is no change as such. There is only change in the meaning of mutual fund. Earlier, we used to see that meaning of mutual fund was linked to equity shareholding, that less than 35% should be invested in equity shares. Like that, you used to study the meaning of mutual fund. Now, the meaning has changed. What is the meaning now? Now, specified mutual fund means mutual fund which invests more than 65% of its total proceeds in either debt or money market instruments. So in debt instruments, it should be investing more than 65% of its total proceeds. Or if there is another fund which is investing in such mutual fund and it invests 65% or more of its total proceeds in the units of such mutual fund, then that is also called as specified mutual fund. So what is specified mutual fund? A mutual fund which is having more than 65% investment in debt and money market instruments, and also any fund which is having 65% or more investment in the units of such fund which is mentioned above, that is also called as specified mutual fund. And to calculate this percentage, how should you calculate the percentage? The percentage of investment in debt and money market instrument shall be computed with reference to the annual average of the daily closing figures. So daily you have to take closing balance. Of that closing balance, you have to take the average. Using that average only, you should calculate the percentage. So this meaning, there is a small change, not very important, but still you have to know, since there is a amendment, you have to be thorough with it. Now let's come to the exemptions in in capital gain chapter. Let us discuss section 54 EC, that is investment in bonds. In this, two more bonds have been added, Kanna. So first we had studied that investment can be done in NHAI, RECL, PFCL, RFCL, that is National Highway Authority of India, Rural Electrification, Power Finance Corporation, and Indian Railway Finance Corporation. Now two more bonds have been added. The first one is Housing and Urban Development Corporation Limited, HUDCO bonds, from 1/4/2025 onwards. So this date is very simple to remember, not a problem at all, because for the entire previous year it can be invested. But then another bond was added from 9/7/2025 onwards. This date you have to remember, because before 9/7 if investment is done, it is not eligible for exemption, but from 9/7/2025 onwards investment is done, it is eligible for exemption. Which is the bond? Indian Renewable Energy Development Agency, IREDA. Okay, Indian Renewable Energy Development Agency bonds. So these two bonds have been now included in 54 EC. So these are only the amendments in capital gain chapter, nothing much. one small point I want to clarify. Previously, you would have studied the transition provision, correct? That before 23rd of July, the tax rates were different. On or after 23rd of July 2024, the tax rates were different. Sir, now in this year, that is previous year 25-26, assessment year 26-27, should we only learn the new tax rates? Is that enough? Answer is no, Kanna. Even now, for May 26, September 26 and Jan 2027 examinations, I would recommend you that at least brush up one time what are the old tax rates, that is before 23/7/2024. It will be helpful because it is there in the syllabus. If at all a transfer takes place before 23/7/2024 and given in the question, then you should be able to answer. Fine. Now in income from other sources, no update. Then let's come to deduction. Clubbing also there is no change. Set off and carry forward also there is no change. Now we are coming to deduction chapter. In deduction chapter, in only one section change is there, that is section 80 CCD. Now what is this change? Kanna, the central government has brought in a new concept in NPS, that is National Pension Scheme, and that is the concept of NPS Vatsalya account. What is this NPS Vatsalya account? Now even children can create an account in NPS and the parents will be contributing for their children in the NPS account. This is only NPS Vatsalya account. So if parents are contributing for their children in NPS Vatsalya account, that contribution is also eligible for deduction under section 80 CCD. Fine. But it is subject to 80 CCD 1B limit. What is 80 CCD 1B limit? For employee contribution, the limit is how much? 50,000. Now in this 50,000 only, NPS Vatsalya also is included. So if a parent or guardian is contributing for their children, they can also claim deduction subject to this 80 CCD 1B limit. Sir, is 50,000 limit for employee contribution and another 50,000 for children? Answer is no. There is only one limit of 50,000 for both employee contribution as well as children contribution combined. The limit is 50,000. Apart from that, 80 CCD 1 limit is also there, so that also can be used for employee contribution. Fine. And then there is an exemption related to NPS Vatsalya account. Section 1012BA was introduced, where from this NPS Vatsalya account, that is this children account, if any amount is being withdrawn, maximum 25% only partial withdrawal can be made. If partial withdrawal is made, this 25% is exempt from taxation. However, if at all in case of death of the minor, if parent is getting the amount, then such amount is completely tax free. Okay. So deductions are also over. Now let's come to TDS TCS chapter. In TDS and TCS only many amendments are there, and especially when it comes to the limits of different TDS sections. Now let us learn those amendments one by one. Firstly, let us talk about section number 192, which talks about TDS in case of salary. So if an employer is deducting TDS on salary, earlier we studied that employer should consider the details of other incomes, deductions, TDS furnished by the employee. So employee will give the details of their other income also, their TDS also, their deductions also. It has to be considered by the employer. But now there is a change. Even TCS has to be considered by the employer. This is already there, but still I am reiterating this so that you are thorough. Fine. So even TCS has to be considered by the employer for the purpose of deducting TDS. It means what? Listen here. For example, employee has purchased a car. Okay. On this car purchase, let's say it was 15 lakhs. So on this 15 lakhs, 1% TCS was collected by the car dealer. So this employee will inform to the employer that the car dealer has collected 1% TCS from me. So what will employer do? Employer will calculate the TDS. No, from this TDS, he will reduce the TCS on car and balance TDS only he will deduct. So this is only the concept. Now let's talk about section 193. For section 193, the limit up to which no TDS is applicable has been increased to 10,000 rupees per annum. So this is the change. Then in section number 194, that is TDS on dividend also, the limit has been increased to 10,000 rupees per annum. Earlier it was 5,000, now it has become 10,000. Similarly, in section 194A also, earlier the limit used to be 5,000, that has been increased to 10,000. And also, if at all, in case of interest received on time deposits from bank or cooperative society, earlier the limit was 40,000 in case of normal individual and 50,000 in case of senior citizen, correct? Now the limit has been increased to 50,000 in case of individuals and 1 lakh in case of senior citizens. So that has been updated. Then section 194B and section 194BB, winnings from horse race. For both these sections, the limit earlier also was 10,000. Now also it is 10,000. But earlier it was 10,000 per annum. Now it has been changed to 10,000 per transaction. 10,000 per transaction. Then let's talk about section 194D, 194G and 194H. All these three sections are related to commission, correct? Earlier the limit in all these three sections was only 15,000. That has been increased to 20,000. So the limit is 20,000, up to which there is no TDS. Okay. Then section 194I, rent. Earlier the limit used to be 2,40,000 rupees per annum, but now it has been changed to 50,000 rupees per month or part of the month per owner. Okay. So now for 194I also the same limit. Similarly 194M also, where we discuss about rent in case of Archie Junior case, there also the same limit, that is 50,000 rupees per month. So both cases the limit for no deduction of TDS on rent is the same. Then for 194J, earlier the limit was 30,000 and this 30,000 separately you used to see for professional fees, technical fees, royalty and non-compete fees. Now this 30,000 has been increased to 50,000. So this 50,000 separately you have to see, separately 50,000 for professional fees, separate for technical fees, separate for royalty and separate for non-compete fees. Now let's come to 194K. In 194K also the limit is now rupees 10,000 per annum. Then section 194LA, that is compulsory acquisition. For compulsory acquisition, earlier the limit used to be 2,50,000, but now it has been removed and now the new updated limit is 5 lakhs. 5 lakhs. So during the year, if 5 lakhs is received as compensation for compulsory acquisition, no TDS. Above 5 lakhs only TDS will be deducted. Okay. Then section 194T is a new section that is introduced. Section 194T, payment to partners. So if a partnership firm is making a payment of salary, remuneration, bonus, interest or commission to the partners, and if aggregate value of all this combined is up to 20,000, there is no TDS. But if it is more than 20,000, then on the entire value, TDS has to be deducted at 10%. So on what and all TDS will come? Salary, remuneration, bonus, interest and commission which is paid by a partnership firm to its partner more than 20,000 rupees per annum in aggregate, then TDS will come at 10%. Fine. Here you don't get confused with section 40B limit. In section 40B, we have learned the limit for interest and also for remuneration. You don't get confused with that. You don't consider that limit here. You just blindly see how much is the firm paying to the partner. Using that, you do the calculation of TDS. Fine. So that it will become very, very simple for you. Now let's come to three sections which are now removed from the syllabus, which is removed from the Act itself. First, section 206AB, then section 206CCA. See, 206AB was related to TDS, 206CCA was related to TCS. Both these sections were similar, where if the person had not filed the return of income, then higher TDS or TCS has to be deducted or collected. Now this section is removed, no more. Similarly, there is section 206CH, where if a person whose turnover was more than 10 crores was selling goods and receiving consideration of more than 50 lakhs, then TCS had to be collected. Now this section is not there. Fine. So no need to study the section. relief for you. So TDS, only these many changes. Now let's come to TCS. In TCS, for two items, the rate has changed. What are the two items? Number one, timber or any other forest produce not being tendu leaves obtained under forest leaves, and then timber obtained by any mode other than C. So in case of timber, earlier the rate used to be 2.5 percentage. Now the rate is 2 percentage. So in case of timber, the rate is how much? 2 percentage. Then let's talk about 206C1F. 206C1F was earlier about the sale of motor vehicle. So only sale of motor vehicle, if it was more than 10 lakh rupees per vehicle, TCS was attracted. Like that only you had studied. But now, apart from motor vehicle, so many other items are also there in this section. What are they? Wristwatch. So if a person is selling a wristwatch of value more than 10 lakh rupees, then such person has to collect TCS. Similarly, any art piece such as antique, painting, sculpture, any collectibles such as coin or stamp, any yacht, rowing boat, canoe or helicopter, any pair of sunglasses, any bags such as luxury handbag, purse, etc., any pair of shoes. So luxury shoes also is covered. Any sportswear and equipment such as golf kit or ski wear, any home theater system, or any horse for horse racing in race club and horse for polo. So now apart from motor car, all these assets are also included. Sir, should we remember all this? Answer is yes, Kana. Definitely you have to remember all this, because I personally feel that in any of the three examinations, definitely this is going to be tested, where if a person is purchasing any one of these items and if the value per item is more than 10 lakh rupees, then TCS has to be collected by the seller at 1%. Fine. And that too, here you have to remember the date also. It is 22/4/2025. So before 22/4/2025, there is no TCS on these items. Only from 2022/4 onwards, TCS is applicable. So this is something that you have to make some effort to memorize. Now let's come to section 206C1G, which talks about foreign remittance and OTPP, that is overseas tour program package. In both foreign remittance and OTPP, earlier the limit used to be 7 lakh rupees. Okay, now everywhere the 7 lakhs has been changed to 10 lakhs. So 10 lakhs, 10 lakhs. Okay, here also in OTPP case also 10 lakhs is the limit. Balance everything, the concept, everything is the same. So with this TDS and TCS chapter over, now let's come to return of income chapter. Firstly, let us talk about section 139(8)(a), that is updated return. Earlier, up to 2 years, a person could file updated return. Now it has been increased to 4 years, that is 48 months. So for previous year 25-26, updated return can be filed till 31/3/2031. So it has been increased to 4 years. An additional tax also has been introduced. So earlier, 1 year late updated return, 25% additional tax. Then the second year, it was 50% additional tax. Now after 24 months, it is 60% additional tax, and after 36 months, it is 75% additional tax. So this also now you have to remember. Lastly, section 139(AA), voting of Aadhaar number. Earlier we saw that up to 1/10/2024, if enrollment ID also can be quoted while taking the PAN card instead of Aadhaar number. What is enrollment ID? While you are getting Aadhaar, before getting the Aadhaar number, you will get an enrollment ID while making the application. Instead of quoting the Aadhaar number, you could quote the enrollment ID also up to 1/10/2024. From 1/10/2024 onwards, compulsorily you have to quote Aadhaar number only. You cannot quote the enrollment ID. And now what is the amendment? The amendment is that if the persons have already quoted enrollment ID, then they have to compulsorily intimate their Aadhaar number to the income tax department. The last date for intimating the Aadhaar number is 31/12/2025. So this you should be knowing. Not a very big change, theoretically only, not practical. Fine. So in multiple choice question can be tested. So these are only the amendments, Kana. So within half an hour, we have completed all the amendments. It was a small lecture only. So these amendment notes, you see it, using this, you update your existing notes, and question answer, you please work out using the new updated material. I wish you all the very best. The revision lectures are also on the way. They will come in a few days. One by one, I will be uploading all of them. I have also uploaded demo lectures for my regular batch. Fast track batch details also I will mention in the description box below. Anything else, you please let me know in the comment section. See you in the next video, Kanna. Till then, take care. Bye bye.